Hi, Warriors. Good turnaround Tuesday. Dollar rallying. Looks like it could be that wave C. We had the first push up, then the pullback into last night, yesterday afternoon's lows in the Dixie, highs in the euro, and pressing. So dollar looking okay. I think that we're going to complete Dixie up around par 50, par 80 to 1.5. How you
Morning,
doing,
coach. We,
Al?
we we can't see your screen, by the way.
I didn't pull it up yet.
Oh, okay. Thank you. Sorry.
That's all right.
Good morning.
Good morning, Stel. Try decaf. Anyway, let me say hello real fast so I could get Stel on. He's bursting. Let's see. AJ, how are you? Ingmar, Mike, Kman's here. Steve is here. AJ, Ryan's here. James, Paul, Hugo, all you loyal people. Bran, Ingmar. You must be here because you think you're going to learn something that's going to make you some money today. Give me a why if you think that's the truth in here in face. And how many times a week does it happen? Always? How many times a week? Because I guarantee it's dwarfed by what happens in the chat. All right, let's go to work and take a look at a few things here. And Stel's here, so I'll let him lead off. Oh, I should just let you take the chart, Stel.
Yeah, I
So
can do that.
I could do that now. So
Well, whatever you like.
anyway, just quickly, here's, this looks like an ABC. If we have a quality here in the Dixie, 200 from here would take it to par 80. This was a 200 pip rally. Similar thing in Euro, it popped through that triangle. We had this was the false breakout, and here I think the failure is coming soon. Under 113 is going to be a great buying opportunity in euro. Okay, it led the way. And even though the pound made a new high yesterday, look at the divergence between here and there. So I'm in the dollar correction camp as well with yen held where it had to. Yesterday's 42 was a support zone. So maybe we're on our way to take out 44 and head towards 45, 46. That's the way things look to me, and I won't cover the metals. That gold silver ratio, how about it, Stel? I'm giving you the
Yeah.
screen. There you go.
Okay. Let me share desktop one. Okay, so hello everybody. I'm gonna start the way I always do, which is with yields, which I still think is the main driver um, for pretty much all markets or almost all markets. My main view remains that we're going to see yields resolving to the downside. How low do we get is a good question, but I still think that treasuries and gilts, for that matter, I think they're going to edge lower. Are we going to challenge these lows, 385-ish on the 10-year? I think so. And a
Okay.
similar story with gilts. We are at a relatively important level around here, 445 to 447. If we break below, then there's only these lows here, and then we go lower. But I still think that yields are going to be, maybe chopping a little bit sideways, but I think they will resolve lower. And when that happens, or if that happens, I think the DIX is going to follow. My view for the dollar is for people who are on the Forex Analytics platform, they can see this. Um, I think we're going to be probably edging towards the low 90, mid 90s, 95. We probably will see some kind of a bounce at some point, especially if we do get any positive news, which I think are unavoidable regarding tariffs. Then I think we could see the dollar squeeze a little bit to, wherever we can. Actually, I'm going to update that probably back towards the zone here or something like that.
Yeah.
Um, but then I think that we will grind lower towards the mid 90s. And remember, this is what Donald Trump wants. He wants low yields and a weak dollar, and he has been getting it for well, for the dollar at least. He has been getting it since he got elected, and I think we will be heading towards that direction. Um, you did mention metals, gold and silver. Well, the gold-silver ratio is now below 100, and we've been talking about it for a while. When it gets above 100, it stays there for very, very little time. Last time it got there was in the COVID crisis, which was a freak event any way you look at it. And before that, well, I actually don't know when we got above 100 before that, but I will always prefer silver to the long side compared to gold at these high levels of the high levels of the ratio. And
Would you exchange, you ever do it, Stel, where you have like historic things like where the gold silver ratio is at and actually take some of your gold and convert it to silver?
yes, I've done that. I've done that already. My
That's
main
probably a good time to do it again, don't you think?
yes. Well, as I said before, above 100 on the gold silver ratio, you know that it's going to reverse lower eventually. And as I said before, it doesn't stay above there for long. So I think that's a my preferred longs are still silver and platinum. And
Pull up the weekly dollar and everyone keep this in your head.
the
This
Dixie.
chart that yeah, yeah. Doesn't that look the same? We had that high, and then I'd say
Oh
what,
yeah.
and look, it was at 110 too. So it looks a lot like the dollar did, a lower high after a lot of sideways action, and then it declined. Now put it back up there, and
That's a very good point, actually. Yeah, high, sideways, lower high. Yep, I
yeah,
like that. So my main position for people who have been following me, they know I've been long silver. I have two positions from 23.10 and 32 and change, and I'm not going to be touching those anytime soon. And really 34.85 is the level that we're looking at in silver for the breakout, and when that breaks out, then really, it's anyone's guess. But gold has been outperforming for the past few weeks because of the uncertainty, because of the tariffs, because of everything. And when we do get some kind of positive news, which I think we will, because Trump knows that tariffs are not, I mean, eventually they're not good for the US consumer. And the US compared to China, it's they're not producing everything that they need, while China does. So who stands to lose from this standoff? Most likely the US. So he knows that, and I think eventually there's going to be some kind of agreement. He's going to make it look like a win. But when that happens, going back to metals, I think gold will underperformed definitely silver because it's been outperforming on the way up because of the uncertainty. Uncertainty gets removed, gold underperforms. I'm not saying it's going to be crashing, but I think that some kind of pullback towards 3,000, maybe even 2,800 could happen. But if that happens, you're going to see the ratio coming down to 80 or so, 80, 85, coming back down to this area there. So that's my view on metals at the moment. Equities are still, this downtrend here was magnificent, and it hit that 4,800 level that we were talking as a first support. It hit it almost to the T. We're back above now, and kind of in low man's land. I think that if or when we do get the positive headlines on tariffs, we're going to see another push higher and maybe even take out these all-time highs. But for now, I think we should theoretically be in buy the dip mode because markets um, are kind of expecting or anticipating some good news. And I think that this is, well, we definitely have a very clear support area that we need to hold, which is 52 to 5,300. If that holds, if we get a pullback, if that holds, then I think we're going to be heading lower. But this is for me is my bull bear line, 52.50 or so. Um, what else to say? Oh, dollar CAD. We saw the news. Liberals have won the elections, which is incredible if you think about the polls only a few weeks ago when Trudeau was the Labor the Labor leader, and he was effectively nowhere. Poilievre, the opposition was running away with it, and then Mark Carney takes over, and with nothing really changing in terms of policy, he wins by an absolutely amazing margin. So, what does that tell you? I don't get it, but I think we're going to see the same strategy and same uh, political views that we had before with Trudeau. So nothing's changed, and that for me is not going to be positive for the CAD. So I'm going to be looking to buy dips in dollar CAD, and actually this is not a bad level. If you ask me which pair I want to be long the dollar against, it's going to be against the CAD. So this is not a bad level. It's a zone here. We have the descending trend line. I like it. The fib is lower, but it doesn't matter. So this is not a bad level. Actually, I might try taking along here. Where you're wrong. Below these levels around 37.4. Let's see how the market reacts today to the news. But this is definitely $1 pair that I want to be long off compared to most of the others that I want to be short of. And what
Oh, you
else?
say that like Gartman.
Like Gartman, what did Gartman say?
Well, when he would say he has a position, he would say, I'm short of gold. Not short gold, but
I'm
short
short gold
of.
in Canadian terms.
Did he
Yeah,
say that? But it
Oh
was
yeah,
always of.
yeah. There's always in somebody else's terms. I'm
yeah,
gonna be long stocks in euro terms. Okay,
I
all
forgot
right.
about that. Yes, he has a
Yeah.
lot of he has a lot of cover, didn't he?
yeah.
Yep. I'm
All
just here to
right.
confuse everybody.
All
Sorry.
right. Well,
Good.
excellent. Uh, so go ahead. So that
Not
it?
much else. Oil is another thing I'm looking at because we are again getting precariously close to this breakdown level, and I think oil is going to be resolving the downside. We did break down. We got back. It bounced back up. Take out all these shorts that got short here, but given the global economic environment, I don't see how oil is going to be rallying, and given also that supply is getting increased, um, I don't see what's going to drive it higher, apart from some kind of freak event and war somewhere. But yeah, that's pretty much it.
Thank you, Stel.
Thank
Any
you, sir.
questions for Stel? Because he doesn't stick around after he talks. He usually splits. He's like one of those superstars. He doesn't want to see the backup band. Huh? Any questions for him? Okay.
All
Thank you,
right, I'll
buddy.
pass it to you guys.
All right. I'm going to go to Ryan. Hey, Ryan, buddy,
Hello. Hello,
how
mate.
are you?
All good.
Let me ask you this. I know it's happened in history before, but we're all looking at what could happen with Iran and what could happen with this, Taiwan, and then all of a sudden here we have things heating up between India and Pakistan. They've had wars before. They're nuclear powers. I guess China lines up with Pakistan. Uh, can you see, uh, if anything, they're saying that India is planning to invade. Um, what should we be looking at FX wise on an event like that? It's a
Um,
nothing burger.
yeah, I mean these guys, particularly on that area, have been at each other's throats for forever, and they have these little spats now and again. Whether it develops
Yeah.
into something really big, like a full scale invasion or whatever, remains to be seen. But yeah, I mean it's difficult because India's just about to do a trade deal with the US. So is that going to bring them into play as best mates? I think for the moment the market isn't taking that much notice of it. But if it does kick off, we'll have to see how bad it is. Obviously, you're going to look at the currencies,
Yeah.
Indian rupee, and commodities. They'll be involved as well because they're a big user.
How's the rupee acting during this crisis? I don't even have it up. Do you
No, neither
follow it
do I.
at all?
I
Huh?
haven't even. I've got. There's enough wars going on to keep an eye on at the moment, mate. Thank you very much for
Okay.
that. Another one.
You know,
But
uh, you know, mankind fighting over a sweater. Isn't that what it's about? Cashmere? Huh? I
The
mean,
old dad
I
jokes
like
coming out.
my cashmere sweaters, but I wouldn't go to war over them. Anyway, let's get back to Euro. So we went above this, little triangle. Now we're back inside the range. Looks vulnerable to me still.
Yeah, it
How
looks
about
sideways
you?
to me.
Sideways is.
Yeah.
How about
One,
cable with making new highs and coming
yeah,
off?
yeah, a little bit. I don't know if there was a bit of influence from this further talks that the US and UK are getting closer to a trade deal, giving the pound a bit of support on that. But yeah, we're obviously still in month end stuff as well. So
Yeah.
yeah, that's in the mix. But yeah, it's broken, but it hasn't held the break just yet.
Yeah, and
Which is
I think we're at your level in euro pound here, 85.
yeah. I was bemoaning missing it, buying it at 20 the last couple of times. But then since then, it's like I don't fancy it now because that trend is pretty clear. 84.80 is my line in the sand. Probably comes right amongst your moving average right there. Is that
Yeah.
right? 78. Yeah. So
Yeah.
bang on it there. That's my key level. If we're moving below there, then we're probably going to see some further downside for that.
Okay. So gold silver ratio working to the downside. Now you only get 99. There's always that possibility of a 3, but sometimes 2 is enough. So far, this doesn't look like the kind of wave that we could get up here, but kind of looks like a flag. Okay, let's talk yen with Kman. So to me, I cover up the title. We had a nice rally from a 400 pip rally, and we pulled halfway back. Uh, was that the trade?
Good morning, Dale. Good
Good
morning,
morning,
everybody.
buddy.
Good afternoon. Was that the trade? There's good
Still,
interest around that 142. But
yeah,
again, I'm not going to say too much. I'm still, as I said yesterday, I'm running still a little of sterling yen, not dollar yen, but yeah, dollar yen finds beats at 142, but then we have like month end, we have Bank of Japan coming up,
yeah,
US jobs report. I'm just going,
everything.
hmm?
Yeah,
I'm
yeah,
just going to
everything.
repeat what I said. I mean, the dollar yen is perhaps not my favorite instrument right now.
Okay, what is?
I'd rather have it through a cross because
Okay,
I mean, the
all right.
dollar, I don't really know what the dollar is going to do over month end either. What I do think is that the dollar may suffer over the start of the new month, but
Okay.
yeah, I mean, yen is
Yeah,
going
so
to just
maybe we're up, maybe we get this, ABC up to here
yeah,
by weekend, and then we traverse back down to
yeah, yeah. I mean,
Stelios's range and so
if you
forth.
look at it from where we are now, if you bring it back to the yen, I mean, those moves of 1%. They are now very frequent in yen trades, right?
Yeah,
So 144 or back down to 140 and a half or so. It's just around the corner, right?
yeah.
It's not an unusual move for the type of market that we have right now. So I think it could easily do, and why not even both ends of the range before the week is over. And the only thing is that if over the Bank of Japan and the NFPs, if we are above 144 and keep above for the close of the week, then we may see a deeper move unfold up to the top side. Because there is this kind of risk because the negotiations are not over, that the Bank of Japan says goes into kind of ECB mode and says like we want to see what happens now, and we are not going to hike until we see a lot more clarity.
From the tariffs.
Yeah, from the
Yeah,
whole negotiation, they've already made sort of clear that there are no manipulators. The US doesn't need to rubber stamp them as manipulators because they don't. So that part of the argument, that part of the negotiations, I think the Japanese are trying to throw it out of the window. They haven't been saying anything else for a decade now that they are not manipulating. Although we could argue about that when Abenomics named Kuroda at the helm of the Bank of Japan. But we're in a different scenario. Japan yen is already weaker. They intervened to the other side, so I don't think they will come to an agreement to let the yen strengthen if it depends on the Japanese at least. So that part of the negotiation, I think, is maybe already behind us. So now it remains to be seen how hard the US wants to push on those tariffs, whatever it is, on the auto side, heavy machinery and stuff.
Well, we've replaced everything, blaming everything on COVID, which happened for years. COVID, everything. You couldn't get someone to fix your pool, whatever it was. It was COVID. Oh, it's because of COVID. And now we have our new word. Everything in the economy now is going to be related back to tariffs, and that they, not sure how to plan.
Well, the
They
thing
can't
is,
get parts. It's a new COVID word. It's been
yeah,
exchanged.
but I think with some reason because it can throw around the whole trade,
Right.
the
Yeah.
whole thing, how trade looks around the globe. So
Yeah.
we can't look besides it, and then yeah, people are like they say what they want, but I heard from Solomon, he says that everything is going to quiet down after a while. But then if you look at Ray Dalio, he says that Nostradamus is back and the end of the world is near, so if they don't know, how would we? But I do think, I mean, there's still huge risks. There should be agreements found because on either side of any ocean you can't just hang around and let your economy die. So they will find agreements, but what kind of agreements are we going to get? In the meantime, global trade can slow down, and that's not good for anyone.
Hey, thank you very much, Kman. Blake, good morning to you.
Hey, good morning,
And
Coach,
yeah,
and
we're
good morning,
just kind of
everybody.
we're distributing around here. I've been waiting for higher numbers, so I'm not doing anything here. Uh, Same with you. You're waiting for higher numbers, right?
Yeah, this is we are in a market where we're just waiting for things to happen now at this point. I mean, we have obviously earnings right at this moment in time. We have waiting for tariff headlines, and so in the meantime, I mean, we just kind of have to wait to see how it all how it all shakes out. I think the S&P, as we talked about yesterday, Dale, and I'm sorry, I just took over the charts really quick just because I
That's
wanted to get
fine.
a feeling of, where I'm showing you on as far as the S&P goes. I still am looking for this 5650 level. I think it's a big resistance zone, and it's right at the 618 retracement. That is what I've been, hoping to sell at, but I would assume there's a lot of people looking to sell here because if you bought the S&P above 5,500 because you're like, okay, this is going to be a breakout. It's previous lows, previous high. You got long. You're expecting, more of a rally here. You're not getting paid, and the longer the market, sits here not getting and people that are long are not getting paid, the more frustrated they're going to be with their longs. So I would be very nervous if I was on the long side right now, even though I'm not short. I still think that if you're long, you're probably going, "Oh crap, why haven't we seen any follow through at this stage?" So that's kind of what I'm thinking with the S&P. I mean,
Okay.
just generally speaking. But I think we're in kind of pause territory with the markets right at the moment. I mean, you can see how the euro's just stuck. You were talking about it earlier. I think this is a developing a head and shoulder pattern. You know, right now it's in process, but you know, this right shoulder could still go all the way up to 114.70. So I think we have some work to do on both sides, whether we continue to rally or whether the market just rolls over and you know, test support. There's a lot of work to be done for the market at this moment, and I don't think it's necessarily clear cut which direction we're going to go. And so that's kind of where I'm at. I think there are going to be days like today where we are, you know, sitting around sidelined waiting for things to happen. I think Stelios just talked about the dollar Canadian and about, you know, the Canadian elections, and I think Ryan and Kman talked about it this morning as well. You know, Mark Carney is going to have a minority government from what it looks like, and he is going to have a more difficult time pushing any type of initiative through, which should be theoretically based on that alone. But then you throw on top of it, you know, what's the damage going to be to the Canadian economy with the, you know, the U.S. tariff implications. I would think that it weighs on the Canadian dollar. I don't know if the dollar Canadian is the right product to be on the long side, or maybe it is, you know, something like the Euro Canadian, which might be a better option at this point, since it is, you know, holding up not too far from its highs right now. And I mean, we can't even pull back 24%. I mean, it's a 24% pullback. So maybe the Canadians played better on the short side against other currencies versus the dollar. But this is going to be really interesting. And like Ryan pointed out as well, we are in the midst of dealing with end of month, end of quarter type of activity. So let me ask a couple questions really quick, since we just got 3 minutes left before. Dale, do you have an interview today?
Yeah.
Okay, cool.
Don is here.
Okay, yeah. Oh, yeah. He doesn't have. He's not on social media, which is, you know, yeah. I think we got to nail him down. Don Dawson, he's great to have here. You guys stick around because he writes for one of the, you know, big publications. Is it Market Watch?
Bar charts.
Bar charts. Okay, great. Ryan, we have JOLTS data coming up. How's that gonna affect your markets or your feeling, and what are you looking for today with JOLTS, the jobs data?
Well, JOLTS is probably going to take second fiddle to the consumer confidence data out at the same time. But being a jobs week, the market's going to look at it just to see if we get lower openings, meaning that firms potentially have less vacancies going around, which will show sign of potential weakness. And the market's all about jumping on weakness at the moment. So let's look at the JOLTS number. Consumer confidence, it's been in a trend all year, a lower trend. So we're looking for another lower number today. And we'll see what those inflation expectations are coming in at as well. They've been ramping higher too. But we're still to see that coming through to the hard data. So it's still a case of seeing survey data, sentiment data going one way, hard data not showing that just yet.
You know, one of the other pieces of data that we have coming out, which I think has to be really watched carefully, and I know Dale talked with Melody Wright about this regarding the real estate market. Your house price index and composite's going to be out here in a little bit too. Remember thinking about like the wealth effect and how it's getting, you know, kind of hammered here in the United States, which is going to affect consumer confidence. Keep your eyes on, you know, house prices and, you know, the index and what it's looking like, because it could influence, you know, consumers and their behavior in the months ahead. Kman, and thank you very much, Ryan. Kman, what are you looking for today as far as data coming out, and is there anything in particular that you're looking to trade here?
No, also, as I said on the Flow Show, I think consumer confidence, JOLTS are still March data. Of course, if they come far away from expectations, it's going to move. But the rest, I think, is the consumer who is going to take the upper hand on today's moves. And for the rest, let's see what those month-end flows bring. I'm very. I don't have much in dollars actually. I'm very light in dollars right now.
Okay. All right.
Sell
Yeah.
in May
I mean,
and go away, guys. Quick poll for the market. Sell in May and go away.
Well, I mean, if we get a really bad jobs report, the market will get confirmation that things are worsening, and that may be the case here.
Yeah,
Okay.
and then plus, like, think about all the tariff risks around. I mean, how many people are probably looking just to cut and run, just overall, and say I'll deal with this, on the second half of the year. So,
Yeah.
you know,
Yeah. And if you were, panicked, you've recovered half of your losses from peak values. Not a bad area to trim if you
yeah,
felt that way. So
right,
anyway,
right.
good job, Dream Team. Are we through with this segment? See, that's TV
We
term.
are. I just want to make sure I mention that. Remember, we have the Liberation offer going on, which is it is a limited time offer. Our subscriptions are 40% off on month-to-month subscription. We have people that are grandfathered in for the last 8 years that our price is slightly lower than this, but we grandfather people in. So if you lock in this price, you're locked in, and we've backed up our prices for about 5 years to help compensate for some of the higher prices that are probably coming down the pipe with tariffs. So make sure you take advantage of the 40% discount on monthly subscriptions. Usually that's allotted for annual and semi-annual subscriptions. So take advantage of it. Ryan, Kman, you guys keep up the great work. Stel, it's great to hear your voice today.
And I'm still here, by the way.
I know.
Oh,
Look at that. Do you
yeah.
see what happens, Dale? You harassed
Yeah.
him, and he sticks around. He doesn't just
Yeah.
he doesn't give us the what do they call us? The Irish goodbyes, where
Oh,
they just kind of bow out.
yeah.
Anyway, all right, Dale, I'll pass it over to you, and thanks, team.
Liberation, everybody. Liberation. Liberation. Right? Who's liberated today? I bet Don Dawson is a liberated modern male seasonal trader.
Good morning, Dale. How are you? I feel liberated, all right. I got back from the gym. I didn't hurt myself, so that's pretty good, Dave.
Just stay vertical, buddy. I hear that's a
Exactly.
trick, right? Good to have you back, Don. Seasonally, what's top of mind here
Well, I'm just
in
going to
April?
start out here a little bit with I'm going to do a share screen if that's okay. And
Sure. Yeah.
should be seeing the gold chart. I was just going to bring up gold. I mean, it's always on the tip of everybody's tongue, especially in this recent rally we're
Sure.
having. But if you
Yeah.
notice this peak that we had back over here, it's a
Yeah.
beautiful uptrend. I don't see any weakness in this trend yet. I mean, it could reverse, but I'm more of a trend follower, so I wait for more definition. But one thing I do follow a lot of is seasonality. And it was just kind of ironic how we had this huge reversal right here in this April timeframe here. And want to bring this up here. And when you come back, you take a look at the seasonal patterns on gold. Here's the that's MRCI's seasonal pattern. I just used the
Yeah.
December contract here because basically on the left you can see January through December, basically the whole calendar year. But if you look, gold is on. This is something I've written about in my articles before. But one of the best times to trade gold is like during the first quarter of the year. It's just been one of the most traditional, best rallying quarters of the year for them. And basically, what we did, the same thing we did this year, was really good, strong rally. Then it rallies into at the end of the first quarter, right into this peak right here. And notice that's about mid-April right there. All right. And it's
Beautiful.
pretty much where this chart was. I turned my chart off on gold there.
That looked like exactly the path that gold took.
Right, exactly. And oh, here you go. And just came up here and it ran in. Get this back here really quick.
So your seasonal would say if that's a peak that you can just wait till July for your next good entry.
That's what I was just getting ready to say. The same thing, because as a trader or especially as investors, I mean, if you're an investor, timing is still important because if you can buy when markets pull back and then get on board the next, hopefully move up. Timing using seasonal patterns for an investor to me would be make more common sense to me than just, I'm going to buy gold right here. It's like, okay, well, that's okay if you want to sit on it for 20 years and maybe it'll come back. But I just don't like buying highs like this. So anyway, my point on
the
this,
art of trading all boils down to the when, doesn't it?
yeah, and I mean,
Not if, not if. A lot of people trade on if. Well, I'm sure
yeah,
gold will be good long term. I'm sure this will be fine long term.
yeah,
They don't care about the when. They just want
exactly,
in. They
yeah.
just want in.
And then
Okay.
I was going to pull this up, but here's that January 1st of the year, but that beautiful first quarter run that we had this year didn't let us
Yeah.
down again. And
No.
it was interesting because if we go back, I'm just going, and of course these are going to be futures, so I'm going to have the liquidity back here. But here was last year's.
April again.
Uh, there we go. So here's your
That was a
January
little.
timeframe of
Yeah.
last year of
Yeah.
24, and then we get right on up here in April, and then we had a little peak over here. Well, not May, but again, this is what we could probably see this year doing the same thing because it is a very bullish market. The
It
point
sure
is, it's
is.
just like at this time of the year, it's kind of hard to see another explosive move to the upside. That's all. I'm not going. I wouldn't short it here, but I wouldn't get overly excited about buying it up here either. So I just wanted to kind of bring that up to just sort of make people more aware of there's better times to buy gold. And I think what we're going to see is maybe, and remember, corrections not only can go down, but just like we saw for last year, it can go sideways, right?
Right.
So peaking out here in April means we could just chop here until we get somewhere around this 1st of July. But basically, look at this. It's the beginning of the third quarter. Think of these metals and even financials, if you will. Quarterly times are interesting in a lot of markets, but gold, in my opinion, is probably one of the best as far as first quarters are usually up, second quarter's down, third quarter's up, then fourth quarter's down. And it's a pretty
Nice.
cool pattern if you can, and then you get your trends to confirm it, and then that's something to take a look at. So, but anyway, I just wanted to bring this up here on gold today, and
I know
kind of
there are no seasonals on this, but I also know you're very seasoned. Anything we should be paying attention to with things heating up between Pakistan and India?
um, I'm just trying to tie into the only thing I heard. I was at the gym this morning. I saw I'm trying to remember the guy. He was from can't remember his name now. He was on the Shark Tank, the bald-headed guy that was on there. It's like my
Oh,
guy,
Mr. Wonderful?
Mr. Wonderful. There you go. He was on there talking, and he was making a comment about like if India signs this deal to let U.S. cars come in without that 110% tariff or whatever it is, he said he sees the Dow going up 1,000 points on that. And I was like, whoa, that's pretty interesting. So, and you'd mentioned before I came on about, there's a lot of a holding pattern right now. You don't see big money coming into the market. And I'm a swing trader. I don't do day trade. So for me, it's really shortened my time in the market because the moves are not, there's really not a lot of continuation in a lot of our markets right now. I'll be
Yeah.
glad to see some coming in, but right now I'm just kind of tiptoeing
Like,
around, let's put it that way, and not putting
yeah,
any
again, that's
big
not
ones.
your style, really. Your style is you're a trend trader that uses seasonals.
Yeah,
So
yeah.
what do? Do you just lay off the market for a while down, or do you
I become much
do
more,
you shorten your time, your time horizons?
yeah.
Look at
I
4-hour charts.
Yeah, I basically just cut my risk down. I usually trade minimum size, and I
Yeah,
don't. This isn't my time. I don't feel like this is my time to reap profits. Is what I'm not that like. For example, if I was in a gold, coming into one of these quarters like this or another
yeah,
instrument, then I start getting a little bit more aggressive. But when I'm in these kind of times where the volatility in the market is just so big, and yet the market's going. A lot of these markets are going nowhere. I noticed you were talking about the euro there as well. Starting to base and go sideways as well. And typically, what I found is, and if the euro is going sideways, then the dollar is typically going sideways, right? Just because of the weighting of the index, or the dollar index. I'm sorry, but I've noticed when the dollar index starts to go sideways, a lot of our commodities, because they're priced in dollars, start to go sideways as well. And so
okay.
I don't see anything in my future like to get me really excited about putting big money on the play or in the market until we start seeing some more trends starting to develop. And could they
Okay.
be coming? Of course, but I don't know when. And so I just kind of play minimal risk right now is how I'm looking.
How are seasonals in the energy patch going into driving season?
We've sort of already played that one out. I can show you a chart here on oil really quick, and let's see, go back here.
So we've already peaked and we're going down.
Yeah, that what that seasonal has. It actually failed this year because of the surplus oil that was coming along. I just pull a December seasonal pattern up here. And that way, again, we can see the entire year. So this is just an overlay of the 30-year and the 5-year and then the 15-year, which is a pretty common one. But and again, this is another one that has a very good traditional from December up through the 1st of May, basically, is when that rally. That's a really good run in crude oil. This is one I like. Not only do I like to see trends on this, but I start looking at the commercial activity, and I'm looking for refiners, basically gas companies who have to be buying oil. I'm looking for them to be getting bullish during this period right here. And this year, it just didn't materialize. And we didn't get that rally all the way into May. So May is typically our peak up in here, as you can see. And then throughout the rest of the year, we just kind of dwindle and go sideways. You get that September right around here. You get the Labor Day little perk up
Maybe
right
they
here.
invert. Do these
Uh-huh.
seasonals you ever see them invert? That say, like, April's supposed to be a high, or, or late May is supposed to be a low, just an
Yeah.
inversion of a
Oh,
cycle.
yes. You know who's doing that right now is copper. Copper has been just destroying seasonal patterns. And I think there's so many cross currents in there with China, tariffs, and trade wars going on, and the economy slowing down, that we're seeing exactly what you just said there. We should be peaking and we're troughing, and we should be troughing and we're peaking. So that's just a time there after following seasonals as long as I have, you realize that seasonals, they're just sort of out the window right now for a copper market. And so you just learn to leave that market alone seasonally. And just if you want to trade the trends, that's okay. But I don't try to apply seasonality when you're seeing those kind of, and we're talking about big, like these kind of peaks right here are turning into troughs on the copper market. So it's
Interesting.
run away from it.
Okay.
But
Go ahead, Don.
I was just going to bring, how are we on time? We got a little bit more time?
Yeah.
Okay, I just finished up an article yesterday because we started out talking about gold, but this is something that a lot of traders don't pay a lot of attention to. I just wanted to bring this up here, so I wrote about it yesterday. But on barchart.com, when you log into it here, or log in, you just get onto the website. There's a link to the news articles right here, and that's where you'll find my articles at by clicking on news, and then over here under featured authors, Don Dawson is right there. And these are all my archived articles for the years I've been writing for Barchart. These are all free. You can use get these no subscription or anything. But I just wrote this article yesterday, and it's on the DBA ETF, which is the Deutsche Bank Agricultural ETF. And just want to touch something here really quick. It's a really nice way to look at, i.e., inflation, right? And then if you got rising inflation, you got opportunities for traders as well. So it's Invesco is the firm who created this ETF right here. And basically, this is what the ETF has looked like. This is I put a weekly chart going back to COVID here. I heard you guys talking about that before the show as well. But this is what this market has done, basically. And this is an inflation type of an index. And if you notice, it too it's like gold. It's not showing any signs of weakness right now of turning down. I mean, we got a little bit of weekly pullback right in here, but if you look at these significant lows in here, they have not even been challenged, right? So they're looking really good. Now, this DBA
it's interesting you brought it up, because that's what I was going to ask you about. Was after the tariffs announcement, they clipped all the grains, and the grains are acting like it didn't happen, because they all came back pretty aggressively. And I'm thinking with La Nina out there this year in the Pacific, that maybe we're going to have some trouble with dryness in the breadbasket this year.
It's interesting you brought that up, Dale. I'm familiar with El Nino and La Nina, that type of thing. This year, I heard we're supposed to have something called a Euro Nina, which is, it's not El or La, it's the one in between. And the problem with the in-between one, they're so unpredictable. We can get in different parts of the country now, we could get extremes of either way, wet or dry, but it's going to be very difficult for weather predicting this year. Did you notice yourself this past year how accurate weather forecasts were? It was unheard of predictable, right? And I'm sitting there going like, because I've always said if I ever, when I die, I want to come back as a weatherman, because it's the only job you can be wrong so many times and people still pay you, right? So they actually got it right more this past year, and it was part of because it was based off the El Nino, I believe it was. but it gives consistent patterns. And La Nina gives consistent
Right.
patterns, makes our job a lot easier. This year,
Okay.
it's supposed to be a lot more erratic weather patterns. So I'm kind of keeping an eye on that, especially in the crops, because, you know, the crops are really driven by weather. So I'd be interested to see how that unfolds this year.
Yeah, well, they've had nice recoveries. I think, and I don't, and corn did not make a new low. Wheat hasn't yet, and beans I don't think did either. So, you know, they're really underowned.
Yep, they're
Aren't
holding
they?
they're
I
holding
mean,
their own. That what's interesting with this DBA index right here, and right there, this is the components of them based off of April of this year, and I got these, pulled them down, got the information here, but this is what really drives it. For example, cocoa, like one of the things I like about this index, there's no energy in it. These are commodities that we eat basically. Okay. The one problem with like the Goldman Sachs commodity index, it's so heavily weighted in the oil market or energy market that if you put a crude oil chart next to the Goldman Sachs commodity index chart, you could overlay those and they're just 100% correlated just about. Here, what's interesting is you have markets like cocoa because it's carrying the most weight in here. And we remember what the cocoa market just did, right? Had a beautiful, I mean, huge bull market run. Coffee is making a bull market run. Sugar, I think, is turning around, getting ready to make another run here as well. And there's a couple of notes I found I put in this table here as well, if you wanted to put check those out when you read the article. And here's your corn and soybeans, and they carry a pretty decent weight in this as well. And some wheat, live cattle, all new highs. Feeder cattle, all new highs. Lean hogs are coming back up to new highs again. So these commodities are kind of like sleepers. And as individuals, we don't pay much attention to them. But when you take a look at them as a whole, this is not looking like the Fed's going to be cutting rates as aggressively as they want to, unless something happens administratively and, you know, Powell gets thrown out or something like that. I don't know. I don't even want to get into that. But I'm just saying they want to cut rates. And if you look, they're predicting 4 cuts between now and December, quarter point cuts. It's going to be a little hard to do that if this inflation doesn't start backing down a little bit. So I just kind of wanted to get the viewers and let them see that there's this index out there, and DBA is the symbol. Very good index to track true inflation in the market. It goes down here.
Do you trade it at all, or
you can? Yes, I do it on the ETFs. They got them right here. The DBA ETF is some of the ways you can actually trade these. So, and also, this is another fact that I found, that this DBA has outperformed the S&P in the most recent years, believe it or not. And what's the S&P's done? 20-some% for 2 years, right? So this DBA is a sleeper, and people need, traders should be aware of it for diversifications in their portfolios. So, you know, if you get beat up on the S&Ps or something, this is a good investment to pick up a little bit of profit. It doesn't have a lot of volatility in it in the sense of dollar range, but that's a good thing because it's not, you know, not whipping you all around, but at least it stays steady in its trend movements.
What's it stand for? Don't be asinine.
Deutsche Bank Agricultural. Yeah. But yeah, that's probably a good one to call it.
I mean, you go to the grocery store, you watch the news, so why not buy what you're complaining about paying for?
Exactly. And then down here, you can do futures and options also. But also, one of the things I like about this, if you trade cocoa, for example, or coffee, those trade on the Intercontinental Exchange or ICE Exchange. Their data feed is like, for individual traders, like $125 or $30 a month. And it's ridiculous for the handful of markets you can actually trade on there. So to get around that, you can buy the DBA, especially if you look at the weighting here. If cocoa starts to go into another bull market and it keeps this weighting in here, because these weights change based on reallocations of how the trends are doing. But if cocoa does another bull run, that's what leads the DBA. So you could trade DBA and basically be a proxy for the cocoa market. Same with coffee. Either one of those two are going to be tracking coffee and cocoa because of the weight they carry in there. And
yeah, I would. You may want to be careful trading on the ICE exchange.
Oh my gosh!
Because you could end up in El Salvador.
Yeah, I never, you know, I just never.
I'm sorry, Don. I'm sorry, Don. Sometimes I just can't help myself. All right, thanks for putting up with me.
It's your show. You're going to take all the hits.
I like to hear you laugh. I mean, you bring good stuff, but you know, I like my guests to have a good time. So, I mean, you brought some key stuff for us to consider going forward. Any feeling on? I know you're trading, but do you think China's going to come to the table, or they're just
I
going to
think they
play this
will.
out?
They don't have much choice. Their economy, I wrote about them, gosh, that was almost the end of last summer, I think it was. But I actually see China becoming another Japan on their economy. You remember how Japan had their
Yeah.
housing bubble and boom, boom, boom.
Yeah.
I see them going down the same path. I wouldn't surprise me at all. And their economy, they're doing everything they can to, put stilts under it, and it's going to come down. I just don't see how it's going to work.
We have more leverage.
Yes, I believe so. I think we're going to see them coming to the table long before we have to bend.
Okay, here's a $1 million question. Was the low in SPX at 4,800 the low that's going to hold for a rally to new all-time highs?
Wow, that's I've got I trade when I'm in my indexes and stuff like that. I do like monthly charts, and I'm looking at that, and I've got now my monthly, because of the move it came down, is a sideways market for me until it comes back up and either makes a new high or it gets another close or two higher on a monthly chart. But
okay,
I really
it's unclear.
Yeah, I'm just not. I don't see a clear signal on it. However, I do watch. I just want to, if you've got a little bit of time here, I'll bring this up really quick. Stocks and S&P.
Always have time for your wisdom, Don, really.
Oh,
So,
well, thank
go
you.
ahead.
This is the S&P 500, and it's a number of stocks over their 20-day average, 50-day average, 100-day average right here. So the one I like to follow is this 50-day average right here. And let's go to the full chart right here. And what I've found historically, the 50% of this is a good number to look at. And what that means is when this is 50%, when the number of S&P stocks, all 500, when over half of them are above this, that's usually a pretty bullish scenario. And whenever half or more are under their 50-day moving average, that's usually a pretty bearish scenario. But for traders or investors like me, for example, I wait and wait and wait for this opportunity right here. You see, when we get down to this 10 right here, that means, and we went down to 5, that means that at one point in that sell-off we had, 95% of the S&P stocks were under their 50-day moving average. If you think about the demand there is to put money into the stock market, basically from 401ks, pensions, you name it, that does not, it's like a rubber band effect. When it gets down there, it's the yin and yang, and boy, do we get big moves back. However, this we normally see, like when we came back to this retest here, normally what we want to see is if you overlaid an S&P chart on this, I like to see when this comes back and test and makes a higher low here, I wanted to see the S&P make a lower low. That right there is like my multi-year buy signal when I see that. So right now, because I've seen, if we go back into here.
So we need one more low. We need one more low under those recent lows, right?
Yeah, and it's like a divergence. Exactly.
Yeah, okay. All right.
So if we go back, remember when you had the October 23 lows from the last bear market we had? And you see how we came down here and we first touched it, and then we went up like this and here. If we go back and we look at the S&P, you'll see that in October 30, the S&P's made a new low here. But this, meaning the number of stocks making new 50-day or going under the 50-day averages, didn't do that. So it wasn't a broad market move down here. It was just these magnificent sevens made a new low. That right there set up the most beautiful bull market, takeoff right there. And that little indicator right there is something I wait for. And you notice it doesn't happen often. It can be a year or two apart, but I track this thing religiously. And when I see this scenario,
one's not as clean because you don't have that non-confirmation.
Right. That's where I'm confused right now. I want to see, and I think we still have a chance.
One more new low would do that, I bet.
Yes, exactly. Because I don't think this is going to come down that low, to tell you the truth. I have a feeling that something could send, like we got earnings season coming up and stuff like that. Maybe that'll be enough to drop the S&P down to a new low. And as long as this doesn't make a new low and we have a divergence, there we'll have that new rally to get started. So you see, this could take a month or two or three or a year to actually work out. So I'm not a big bull fan off of this. To me, that's not a big move in the S&P.
But that setup would be your bullish setup. So if we get this sell off into June or July, I think we could have maybe shake the tree one more time, Don.
Right.
Take out that 4,800 level and really
Exactly.
panic people
And
for a
here's the
few
480.
hundred.
Yeah, so
Yeah,
I watched the S&P basically, but
yeah,
there's the 480 right there, same
yeah,
concept. But this comes down to here, and that other indicator stays up, like a divergence. That's what I'm looking for. Matter of fact, let me
yeah,
just show you that really quick because we were talking about that on. There we go. So here's remember last year, that 23, here's that
yeah,
October I was talking about. So
yeah,
here's where we'd made that low there in September, and the stocks over their 50-day moving average went up into here, but it didn't make that new low, but the S&Ps did. And
yeah.
boy, that thing turned right here. That was the buy.
Okay.
Right there.
We've
Yeah.
got a case now, man. Everything.
That's just what I'm looking for longer term. If I want to get like ready to pounce back in with all my investments or whatever,
Yeah,
and I basically just follow the S&P index. That's where I like to put
yeah,
money in, or the RSP, which is a balanced, equal weighted S&P. That's where
yeah.
I like to put the money out. But boy, I wait for these kind of setups to really pile
It's
in.
interesting. You come to the same conclusion that I do using a different kind of divergence because I'm just looking at straight RSI on
Mhm.
these charts. And if you put up an RSI on any of the charts you showed me that haven't bottomed, you'll see that we were confirming the price low. There was no divergence on the price low. They were all confirmed lows. And markets rarely bottom when momentum is confirming the price low.
That's
So
interesting. Okay, good to know. Okay.
just, I'm just sharing
So I'm in that camp that
because I love
this
you,
could
man.
roll.
I
This
want to
thing
give
could
you
roll
all these.
over. Yep.
Yeah. All right. Yeah, it looks good. And you know what? What a great thing bar chart is, guys. To look at the left side column for using it for charting and then, go there and read Don and follow Don because every time he's here, I learned something new, and now I have an additional setup for should the narrative I'm looking for, some more pressure in markets into the early summer. Um, I'll be looking for a market tell based upon what I learned from Don today.
Yeah,
I'll
I'll
have
tell you
to
when you.
call him because I don't use that indicator, but
Well, if you, yeah. If I'm just going to be sitting here going like break that 480, I'm going to be right on that page looking at those number of stocks
yeah,
under the 50-day moving average. As long as there is a divergence, it's time for Don to get back in the market. So
Don Dawson, everybody. Follow him, read his articles. It's a great site. It's a good place to educate yourself if you're fairly new, and it's definitely goes all the way up to expert level for people that really want to learn both the technical and fundamental parts of the market. But they have some great editors and contributors, and Don's their best. So we brought the best from Bar Chart, Don Dawson.
thank you. Thank you very much, Dale. Appreciate it. And good luck, everybody, with your trading and be safe out there. There's, crazy markets
Yeah.
and keep that powder dry.
And Meshuggah world, Don. We live in a Meshuggah world. You probably don't. It's a Yiddish word for crazy.
No, there we go. Yeah.
So, Don, thanks a lot, buddy. We'll be talking again in July. And I have a feeling that we're going to have a hot grain market next time you and I talk.
I might be in that camp with you there, Dale. I tell you, it's
Yeah.
Looking pretty good. Corn is going to be the leader. I think it's
Yeah.
it got the most strength out of the wheat,
Yeah, it
soybean,
hasn't
corn.
made new lows for, I don't know, 6 months now.
Yep.
So, it's got, and all of them, the bases are so large. They've been basing for so long because I've thought they were going to finally come out of the hole at least 20 times in the last few years. And corn's really the only one that did and held it. So, anyway, that's it,
Well,
Don.
if your viewers would pay attention to that Invesco DBA I was just talking about, and you can go to the Invesco website and you can see when they get ready to change the allocations around, if they get that sense that corn is getting ready to make that it starts to trend a little bit and they feel that's going to be the leader, you'll see corn replacing cocoa. And that'll be the heaviest weighted. So what that telling you is somebody as big as Invesco is going like corn's getting ready to make a big move, and that's going to be our new leader now. So if you
Boy,
see
that's
that shift up there, that's going to be your first sign that, or a sign that corn's got a pretty good move coming ahead of it.
Yeah, and that's a a great market tell to know that you just learned from Don, and really appreciate you going out with another pearl. There are enough pearls here today, Don, for us to string a necklace and put it
But,
on Mrs.
but
Cleaver. Okay,
but thank you for having me,
spot.
Dale. I really enjoyed being here, and everybody have a wonderful spring and stay safe.
All right, buddy. I'll get in touch with you to confirm a date in July or August. Okay, bro.
Sounds great. See you.
Don Dawson, everybody. Gave you some good stuff to pay attention to. The gold peaking maybe sideways into June, July. What's happening with the markets, DBA. A lot of things to chew over. You could join the team in 15 minutes on the morning edge. And remember, don't just count your ears of corn or your Cocoa Puffs. I don't know. How many Cocoa Puffs would you have a day? And count your blessings. Do it. It's hard to be depressed and grateful simultaneously. So find something you're grateful for and smile today, okay? Good hunting the rest of the day, everyone. See everyone tomorrow. Join the team on the morning edge. Adios.